Ladies and gentlemen, K Kim here. Welcome to the daily update. Hope you guys had a good day trading today. It looks like market is up a little bit. Seems like the market's been really grinding up last couple of days here. It looks like S&P is up about 0.83% today. Pretty much similar throughout across the board today. A little less on the Nasdaq. I think a little more on the Russell and the banks, and then similar on the Dow, but about 0.8% today. And let's get into it. Let's try to figure out what happened today, and trying to forecast what we may witness going into tomorrow. So looking at this S&P 500, this is a 65-minute chart. I don't know why this has a name so long, so it's like, so you can't really see what chart it is. This 65-minute used to be like up here, but know that my daily update videos, they're all 65-minute chart. And so it's like hourly. I've been getting a lot of questions that they are not able to turn their charts into 65 minutes. If you're using TradingView, I don't think they let you do 65 minutes unless you sign up to their service. But hourly is fine. Hourly is just fine. It's 65 minutes will be more precise. You know what I mean? If you really want to be precise with your candlesticks, hourly is it's gonna be fine. And looking at the hourly chart, but. So look at this here. That's the first hour, second, third, fourth, fifth, sixth. So we got 6 hours of trading. Pretty much moved sideways. We actually initially gapped up here, and we did gap up, right? So I wasn't paying attention this morning. I was out all day, so I wanted to make sure we get gapped up here. So I'm looking at cash market, actual index. So we did see a gap up. So let's go back to Spider. I actually just looking at the Spider better. It's just because I'm trading Spider all the time, and so I'm just used to looking at the numbers in Spider numbers. But pretty much Spider or SPX, they're same thing. They move very similar way. So we did see a gap up and initially pulled back, and that's kind of what I meant about, like, I don't know if you guys remember, like, a couple weeks ago I talked about like not wasting time with futures. Like last night, I think the futures were down. I don't know, I didn't pay attention. I just remember what people were saying on social media. Like futures were down like 0.5%, 0.7%. Like I remember on Sunday night, like futures were down at one point like 1.5%. And then what was Sunday? So this was Sunday. I mean, this is Monday morning. So like, I remember like Sunday night, I think a lot of people were, anticipating market to be down because all the riots and looting going on. But, and then the futures are down like as much as a 1.5 or 1.9. I don't remember because I don't really pay attention to it. But we had a very slight gap down. We just got right back up. Yesterday, futures are down. I don't remember what happened. I didn't watch it all day. I just remember we was talking about it, and then we gapped up. So it's really useless. I wouldn't waste time on watching futures or pre-market or post-market. Unless you're trading the futures. But it's best to, after the market is closed, just shut everything off, have a relaxing night, evening. And then next day, you come to the market and face the market in a refreshed, refreshed way, without losing sleep about what the market is going to be next day, worrying about it whole night. It's just completely waste of time, completely wasting your energy, completely waste of your emotion. But anyway, so we gapped up, and then we pulled back, filled that gap. And then we initially, made a move. Next hour, we saw some downturn, but we saw some support in that vicinity there. Looks like these micro-term pivots been acting as supports the whole time. We talked about this on last night's daily update video. That's a prior resistance and new support. And then right here, that's a prior resistance. I mean, that's just micro, right? Micro. And we talked about potentially this being evening star. The bears needed to follow through to the downside. We didn't get that. Instead, we saw a gap up. So once we saw a gap up, that evening star was completely nullified. And then after that, you can see prior resistance now. These micro-term supports acting as support. We danced around there for a couple hours. And the last hour, you can see, looks like we're breaking out of some sort of, pennant pattern there or something like that. So we did see a thrust to the upside and finally broken above, well above these pivots here. Let's put at 306 and 307, right? So what can we say about today's price action that we've been talking about? Cultivation, right? Do we have a higher high at this point? Yes. We got the high. Is that a higher high? Yes. Is that a higher high? Yes. Is that a higher high? Yes. So that's kind of, I've been hearing a lot about how this market is completely disconnected from reality. Like, I totally understand what they're saying, like why they're saying it. And I've been, if you've been following me and, watching my videos, this entire move, I've been talking about how this market continues to push higher with horrendous economical data that has been pushing out every single day. And something that we've been talking about, and as we navigate this market in the last several months, that, you want to continue to give benefit of the doubt to the buyers as long as the market continues to cultivate an established uptrend with the higher lows and higher highs. And so I get what they're saying with the market is disconnected from reality, but really, market really isn't disconnected. It really isn't, because what people don't understand is the market actually projects 6 to 30 months out. That's what people don't understand. It's not about what's happening right now. It's about what may happen next 6 months to 30 months out. So you see some of these stocks like, I talked about this before, like I don't know, Chipotle, right? Chipotle has been completely shut down. And Chipotle is up since the March lows, more than 100%. But if you actually do the performance, if you measure the performance of Chipotle when they were fully operational back in 2016-17, I think, or 2017-18, I remember I tweeted out, I forgot. You know what? Just for the fun of it, let's talk about it. I have the charts. I'm gonna pull it up just for the argument's sake. Where is it? I'm gonna find it. Stay with me here. There you go. Okay. So, I'll spend a little bit more time on this video today. So, this is Chipotle when their entire restaurant is closed, right? And the stock is up 106. I don't know if this is from late May. Yeah, this is from late May, so we may be up a little more. I don't know. I haven't checked, but 162% higher, while the entire restaurant's not operational. Sure, you got a little bit of takeouts going on, but trust me, it's only about 20 to 30% of their revenue. It's not going to be enough. However, look at this performance versus, look at this. When their entire restaurants were fully operational from 2016 to 2018, it went from 750 to about 250. 70% crash. While the restaurants are fully operational, right? $7.50 per share. And about a year and a half later, it was $250 share. 70% crash. While the restaurants are operational, 162% run while the restaurants are closed. So you can see it was closed, it was trading at $400 per share. $1,100. Why there's no revenue for Chipotle? How do you explain that? Can you explain it with your fundamental analysis? Can you explain that with the economical data? No, you can't. You cannot explain. These are the things that what gets many people off. It's because so many people are used to hearing the narrative, right? Why is the market going higher? They always want to know why. And then what happens is because you want to know why market is going higher, these mainstream media will tell you why, even though that's not true. What they're going to do is they're just going to justify it by making whatever story is going on at that point, and they're just going to fit it together to make up a story. So if the market is up today, then it's about the optimism about the economy opening back up. If the market is down, they say something like because market is down because of the China deal that is not going so great, or they're gonna say something about the coronavirus, the death toll is getting worse, or there's a risk, or there's a fear about a second wave. They'll just whatever negative. So if the market is down, they'll just tell you whatever the negative news is going on at the time. They'll just fit it to make it into a story of why market is down when the market is up, and whatever the positive story at that point, and they'll just make that fit into a story to give you a narrative. You see what I'm saying? And so your entire life you've been kind of trained this way, right? Like if something is this, then it should be that, right? But market doesn't move like that. Remember, market projects next 6 to 30 months out. 6 to 30 months out. Market is moving higher because nobody knows for sure, but because there's so many factors that make up this market. But I believe the reason why market has been going up since March lows is because we saw some big downturn in March. And pretty much that has been that 35% correction that we had in March, that plunge, right? Everything was already priced in. The lockdown was already priced in. All that horrendous data, economical data, it was all priced in. It knew all these restaurants weren't gonna make any kind of earnings during this lockdown. It was all priced in. So now why is the market going up? Market is saying what could happen even before the vaccine might be on its way. It's basically saying that the economy, everything else could potentially go back to normal in the next 6 to 30 months out. Why the Chipotle is up so much? Well, the market is looking ahead, and in the next 6 to 30 months out, Chipotle will be fully functional, operational, and people will be that much hungry to go back to Chipotle and eat. And even here in the Twin Cities, a lot of stores were slowly opened up today or this week, yesterday. So haircut places are open and some restaurants are open. Some of the patios are open. So because I think the dining is not open, the patios are open with a little bit of distancing. But I see people already getting very, very busy in those patios that are open. I had to go to the bank earlier, and then I just saw how many people are just sitting out and eating in a patio, and they're serving food. And so, so that's basically in March plunge, that was all priced in. Market already knew it was going to be crazy. And there will be some horrendous economical data is going to be pouring out throughout this year. That's why we probably saw that very, very fast, sharp plunge. And the market is going up. It is projecting that in the next 6 to 30 months, that the economy should be going back to normal. Probably vaccine will be coming, and things might not be as bad. So when the bad news becomes not as bad, that becomes a good news, right? So it was a crazy bad news, and then as we're slowly opening up, some of the news we're maybe hearing is still a bad news, but it's maybe not as bad, right? So that might be positive for the market as the market is looking over for the next 6 to 30 months out. And so we're right here through 308. So we've been talking about this level here, right? That's gap area right here. And so that's the gap area that buyers are eyeing on. And we've been talking about this level for quite some time. And buyers have done a great work in the last couple months filling all these down gaps. There are down gaps here, down gaps here, down gaps here. All these down gaps were all filled, right? And we've been talking about this entire time through this run, but the up gaps are still open. All these up gaps are still open. So we want to continue to give benefit of the doubt. And there's a lot of momentum that has been built, and a lot of shorts are getting squeezed out, and market has been really grinding sideways. We didn't see like a big move, but it's been a lot of up and down moves sideways. And I think that really, we talked about it, I think yesterday or over the weekend, that it really exacerbates the bears, because bears don't like that. Bears don't have any patience. They want to see things crashing down, as fast as they can, they can be part of, right? So, I think with the recent move, it's been difficult for them to continue to short, and maybe they're forced to cover, and then we're still in an uptrend. There's still buyers coming in, and that is continuing to propping up the market, right? So the short-term moving average, we're still about here now. But let's look at the oscillator here. I think this is important that we've been talking about. And you can see we are in that oscillator higher lows. And we are just right there. We're just right there, right here. So we're getting into that overbought level, right? We're getting into that overbought level. So buyers are starting to get a little bit tired. However, they have a little bit more room to move. So they have to really maximize this opportunity. Buyers know that they don't have much of a room. They're starting to get tired. So if they keep grinding higher at this point, they're going to get tired pretty quick. Also, given the fact that, we have established and built up a lot of momentum, right? The buyers did a lot of momentum, a lot of buying pressure at this point, higher lows and higher highs. And we even saw this oscillator higher lows, which we haven't seen this entire run since March lows. So it has built up a lot of momentum. And to maximize this little bit of energy that bulls have left in the short term, best way would be gapping it up. Gapping up above 312, 313. And now that we made a little bit of move, that's not a whole lot of move. Let's measure it. That's 1.5% gap up. That's not a big gap up. We've seen some big gap ups before. Right here, you can see from here to there, that was about 2.4% gap up, right? So we've seen big gap ups before. 2.4% gap up. How much was this gap up? 1.7% gap up. So that was 1.7% gap up. This was 2.42% gap up. 1.5% gap up is not that big. But if we do see a gap up here, I think that will be the best bet for the buyers really jumpstart this thing, knowing the fact that, they're starting to get a little bit tired here. We got a little bit of room left here. We're already hitting that prior high though on the oscillator right here. You can see that, May 28th high on the oscillator. You can see here, right there. So we're just right at it. But if we measure it from this high, from May 18th, there's a little bit of room right there. You can see. So there aren't a lot of room, and we know what happened in the short term, that every time when bulls got tired, we did see a pullback, right? It did see a pullback. So there could be few things happening. Either we see a pullback, maybe hit that moving average before going higher. But if we start pulling back here, you're going to see this oscillator pulling back. and maybe gather momentum again and hit that higher low before trying up again. And I've seen that happening where we'll try it again. Or we're just right at this gap area. If we see a gap up tomorrow or Friday, wait, tomorrow's Wednesday? Today's Tuesday, right? So tomorrow, Wednesday or Thursday, sometime, that will be best if it happens tomorrow or Thursday. If you wait too long, we're probably gonna have, the buyer's gonna have to face pullback because they're kind of running out of steam here. So we have just a little bit of energy here. Best way is gapping up above 312, 313. Above 313 will be best. If we see something like that, I think there's a good chance that this thing could continue higher, maybe even pulling back, retest, and then make this oscillator, reset, and then do something like that. I think that would be the best case scenario for the buyers at this point. If we trying to go up and fill it though, if the buyer's trying to fill this gap, you just want to run it up, right? Instead of gapping it up, it's not going to work. It's not going to work because remember, they're getting tired. We're going to find, there are going to be resistance all of this vicinity. We go a little bit, we're going to pull back. There's going to be sellers in that vicinity. So it won't, unless we see the first hour big thrust to the upside, like a first hour thrust. It has to be first hour. It can't be lingering around in this gap area because this gap area is going to act as resistance. And remember, buyers are already kind of tired. Buyers are already getting tired here a little bit. So the best bet will be gapping up above 313. If it gaps a little low, let's say it gaps to 310, 311 or something like that, it's not going to work because it's going to go up, fill that gap, it's going to pull back, it's going to get a little bit hectic at that point. A lot of volatility, some shenanigans. So it has to gap above 313. Right? We start pulling back here, then that moving average and 300 again. So since bulls have built a lot of momentum, best case scenario, gapping up above 313 and holding above it, that would secure at least this vicinity for the next level, which is 320s. So buyers really have to utilize this momentum they built and maximize the gain, maximize whatever they have left over with this energy they have, as you can see here, by gapping it up. So very, very interesting what's going to happen tomorrow. And we'll come back tomorrow and we'll look at these things, re-examine, and see what happened with the price action here. Currently sitting at 308, very, very close to the gap area. Obviously, bears do not want to see a gap up. If we do see a gap above 313, like I've been saying, it's pretty much gonna be over for the bears. If we gap up above 313, it will be over for the bears because that will be too much price to be up too much at that point right here. This is from the market update. Yeah, that's the last swing high. That's the last lower high right here. That's the last lower high. So once buyers reclaim this and it cultivates higher high from that moment, we gotta categorize this higher high now. We're no longer in a downtrend sentiment in the longer term. At that point, I have to categorize this market bullish in the intermediate term once we reclaims 313 and cultivates higher high. You see what I'm saying? So, so this video got a little longer, but I wanted to do my best to explain what's been going on and why we've been seeing this continual pressure to the upside, despite the fact that, what they think the market is disconnected from the reality. Well, you always want to tell yourself that market is always correct. Market is always correct. Price is always correct, right? So you always want to adjust your strategy based on the price action, not what you hear. Not what you hear. Remember we talked about that over the weekend, right? Everybody's hearing whatever everybody's hearing, whatever you're hearing, it's old news. It's old news. You cannot train and trade off of that, right? We got all kinds of riots going on, all kinds of looting was going on over the weekend. Market didn't even budge next day. Market is actually up since Friday. you can see since Monday lows, market is up 2% despite the fact that people are saying America is burning. And how can this market keep going higher? Well, this market can do whatever it wants to do. You cannot tell the market what it should do, right? You should look at the market that this market is doing this. And how am I supposed to profit from this? Not that you think you think the market should be, crashing or should do this or should do that, right? If market was supposed to be crashing, we wouldn't even be up here. Who thought they were going to be at 300 when we're trading at 220 just a few months ago? Nobody, right? So if market was supposed to crash, we would have never seen price action coming all the way to 300. We would have already cultivated lower high and lower lows, right? If this market, I'm going to end with this, but if this market was going to actually crash and get into a downtrend, we would have done something like this. Boom, 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 right? Lower highs and lower lows. And continue to get into a downtrend. You're going to see all these moving averages continue to fall to the downside. And that's not what we're seeing. So let's continue to give benefit of the doubt to the buyers. And we'll come back tomorrow, re-examine, and we'll go from there, right? You guys have a wonderful weekend, and good luck trading tomorrow.